What is the stock market? Just like the way we go to the neighborhood kirana store or supermarket to shop for our daily needs, similarly, we go to the stock market to shop, read as transact, for investments. The stock market is where all the participants who wish to transact in shares go. Transact means to buy or sell shares in the context of stock markets. The primary purpose of the stock market is to help you facilitate your transactions. So if you want to buy shares of a company, the stock market helps you meet the seller and vice versa. Unlike a supermarket, the stock market does not exist in a brick-and-mortar form. It exists in electronic form. You access the market electronically from your computer and conduct transactions, buy or sell. It is also important to note that you can access the stock market via a registered intermediary called the stockbroker. India has two stock exchanges, the Bombay Stock Exchange, BSE, and the National Stock Exchange, NSE. There were many other exchanges earlier, but none of them survived. So when you talk about the stock markets in India, you are essentially referring to either NSE or BSE. Older stock exchanges like Bangalore Stock Exchange, BSE, Madras Stock Exchange, MSE, Calcutta Stock Exchange, CSE, have either merged with BSE, NSE, or shut shop. Who are market participants in stock market, and what is the need to regulate them? The stock market attracts individuals and corporations from diverse backgrounds. Anyone who transacts in the stock market is called a market participant. The market participant can be classified into various categories: domestic retail participants, NRIs and OCI, domestic institutions, domestic asset management companies, AMC, and foreign institutional investors. Now, irrespective of who participates in the market, the agenda for all is to make profitable transactions. More bluntly put, to make money. When money is involved, human emotions such as greed and fear run high. One can easily fall prey to these emotions and get involved in unfair practices. India has its fair share of such unethical practices. Given this, the stock markets need someone who can set the game rules, commonly referred to as regulation and compliance, and ensure that people adhere to these regulations and compliance, thereby making the markets a level playing field for everyone. What is role of regulator in stock market? In India, the stock market regulator is called the Securities and Exchange Board of India, often referred to as SEBI. SEBI aims to promote the development of stock exchanges, protect the interest of retail investors, and regulate market participants and financial intermediaries' activities. In general, SEBI ensures the stock exchange conducts its business fairly, stockbrokers conduct their business fairly, participants don't get involved in unfair practices, corporates don't use the markets to benefit themselves unduly, small investors' interests are protected, large investors with mega cash piles should not manipulate the markets, and overall development of markets. Given the above objectives, it becomes imperative for SEBI to regulate all the entities which are involved in the market. All the entities mentioned below are directly involved in the stock markets. Malpractice by any of the following entities can disrupt what is otherwise a harmonious market in India. SEBI has prescribed a set of rules and regulations for each entity. The entity should operate within the legal framework as prescribed by SEBI. The specific rules applicable to a specific entity are made available by SEBI on its website. They are published under the Legal Framework section of their site. Thanks for watching. Please subscribe and share the channel for more informative videos.